Welcome back to Credit K's YouTube channel, where we talk about everything personal credit, business credit, anything finance related, crypto, investment, stocks, forex, how to use credit to start businesses, how to leverage credit to pay down bad debt. While you're here, don't forget to hit that like button. It's going to be a great video. Also, tap that subscribe button and the notification bell right next to it, because I'm here with daily content for people who want to learn and repair their credit. All right. So while we got that out the way, I'm definitely trying to build my channel up. So help me get to 1,000 subscribers by the end of the year. We got about 2 months left. So if you're checking out this channel, if you're new here, if you find value, hit that subscribe button and hit that like button on every video. Leave me a comment. I'm here to answer questions, anything credit related. Just ask a question and I will try my best to answer it. All right, but today we're going to start a video in a long series I'm going to do about fintech, fintech related credit card, fintech related products, anything fintech related as far as the software and the hardware side. So today we're going over a fintech product called Divvy. And Divvy uses, it's basically a expense management platform. They do software accounting as well as expenditures. And the great thing about it is they give you a corporate credit card for your spending that's based off of the revenue that your business is occurring or expected to occur. So let me talk a little bit about fintech. Now, fintech, which is short for financial technology, pretty much means they use other metrics outside of just your standard credit scoring, analog things that they read, technology to come up with a decision to get you approved. So, the financial and the technology merge, where how it reads your banking activity, reads your social media credit credentials, reads your sales from an Amazon or a Stripe platform or a Shopify platform. It kind of takes all that data and comes up with a decision to get you approved. So a lot of these cards and these loan companies that I'm going to cover, Divvy specifically, goes more over the revenue that you are bringing in and what your future revenue that you're going to bring in versus just a simple credit score. So to get approved for this corporate card, and a corporate card means a card that you have to pay a large portion or a full of the balance back every month. In order to get approved for this card, they're going to do what is called a soft pull. Now, the soft pull just kind of gets a snapshot of your personal credit. It kind of shows, how much you're spending, how many accounts you have, how many recent inquiries you have. And although they're not heavily, this company Divvy is not heavily credit score dependent, or that's what they're looking for. They do require you to have a certain credit score to get approved, and that credit score is around a 650, 660. They require you to have a 660 pull from Experian on the personal side and on the business side. So you want to have at least about a 650, 660 before you even get approved, but they will not do a hard credit check. So they save you the inquiry in that regard, which is great. Also, you want to have a pretty strong business score already. I think I got 90 to get approved instantly. But you don't have to have that 90 to get approved, but that's just how they kind of guarantee an instant approval with a 90 Experian business score. But I was approved with a 74 Experian business score and about a 720 personal credit score. But the main factor that they're looking for is the revenue. And the revenue that I was able to show by connecting my bank account, my business bank account, with the Plaid platform was about $5,000 to $6,000 a month. Even as a startup business, I was able to provide that amount and get that that approval rate sent through just based off of, you know, the money that business was coming in. Of course, now business been about 7 years old, and I've have heard people and have clients that been approved for this card, and by being a startup, being less than 3 months old, but they was able to show revenue, you know, coming in, and I was able to get approved for 5, 6, 10, 20,000. You know, and then even this car even goes up to $500,000 limit. But remember, this is a car you have to pay back monthly, so don't get ahead of yourself. All right, so I'm just going to kind of go scroll through the site here, show you some of the things that they look for. No fees with Divvy versus other business cards, kind of compare and contrast, and show you some data points. They have flexible rewards. You have unlimited virtual credit cards. So a good thing about that, you have employees at different locations that travel. You can give them a virtual credit card that they can spend, and they can pull it up, add it to Apple Pay, and use it in that regards. And they connect with different software like QuickBooks and other Stripe platforms to kind of read your data and read how much you're spending and how much you're bringing in. And then every 60 days, you can request a credit limit increase and get your limit on these cards increased. So if you start off with $1,000 limit, just ask for an increase. And I've seen people start with low limits as low as $2,000, and now they're already up to $40,000 limit by asking for an increase, you know, every so many days. So go ahead and apply for this card. So like I said, some of the data points, you definitely want to have a 660, although it's a soft pull, no hard credit check. You still want to at least a 660 personal credit score. They pull Experian on the business side and the personal side. You don't want to have no more than about 4 inquiries coming in. Not a lot of new accounts on the personal side, although this is a business product. Just that little small snapshot by getting approved. You don't want to be credit thirsty while applying for any new product. So just limit the new accounts when applying for cards like these, and you should have great success when applying for Divvy. Like I did, if you do not get approved and you need help, sometimes they do ask you want to put in like a secured card and put in down a deposit on these cards. It's still a great way because they do report to Experian business credit. So it's a great way to build business credit as well. But if you do need help by getting approved by these cards or any other fintech related cards, message me on any channel, or you can visit my website at creditk.com or at creditk on any social media website. And I'll help to answer your question, or we can book a consultation and you can get started in my mentorship program where I help businesses and self-employed people use other people's money and gain business funding. All right. So like I said, don't forget to hit that subscribe button, tap that like button. Until next time, K.